Hello and welcome. Thank you for joining us here in a new year filled with new opportunities. We're going to spend some time today talking about one of those opportunities, the single premium life insurance market. We've got reason to believe that it's a little bit underserved, and we think that you might be a good fit to work it. Where do your prospects have their money? That's the question we need to answer in order to figure out why single premium life insurance is so valuable. Right now, your prospects have their money in their bank accounts and CDs. They're not getting a lot of interest there, but the money's pretty safe. They've got their money in the stock market or in direct investments. Maybe they're getting a little bit better return there, but they're worried about volatility. And maybe some of your prospects have money in annuities as well. And there's some pros and cons to those products, and we'll see how they stack up against single premium life insurance as we go along here. Let's start off with prospect money pit number one: banks, CDs, and mattresses. We can lump these all together because they get about the same rate of return, and they offer about the same rate of safety. Banks and CDs being FDIC insured, putting them a little bit ahead of the mattress in that category. You can take a look at the average bank account rates table here. I'm not going to read all these numbers to you. None of them are above 1.5% anyway, so it's kind of depressing. The point being here: savings, checking, money market, CDs. Your rates aren't going to be great. In fact, it is unlikely that they'll keep up with inflation, so you might as well be losing money sticking your money into these things. Our clients have money in variable products too, direct investments in the stock market, maybe mutual funds, they got their IRA, they got their whatever. The issue with variable products, as the name implies, is that your results may vary. Right now, at the time of this recording, we're in the middle of a long-running bull market, and it's been great. A lot of people have made a lot of money. But the stock market only ever is going to offer two guarantees. It will go up, and it will go down. On any given day, any given hour, any given minute, we don't know what it's going to do. We can only look back after the fact and see how we did. And at times, the stock market has done very well. At times, it's done very poorly, as this mailer can imply. Sometimes that's fine. Sometimes our clients and we want our assets in variable products with this type of volatility because we want to be able to take advantage of those types of swings for whatever reason. But it's not always right. And if your clients have money in variable products, they may still be looking for a little bit more safety, a little bit stronger guarantee with still strong rates of return. Fortunately, we're going to get to something that can solve that problem pretty soon. Now let's talk about annuities. I like annuities. Annuities are good, but they're not always great. I've sold a lot of annuities, and they're the right product for some situations, not all situations. The problem number one with annuities is the real meat of the good ones, the highest returning ones. They come from providing income. It's not the direct contract value that's getting really huge in these annuities. It's the income account value. It's a thing that they're ultimately going to use to determine the value of the annuity when they're paying it out over time, when it's annuitized. That's not in the inheritance. That's not the long-term care benefit. That's not any of the other cool stuff that you might find with other financial products. That's not going to provide you the liquidity of the entirety of the income account value of the contract over the term like you might find in other products. It's going to give you an awesome income return. But the problem there is that only 8% of income annuities ever have their income feature activated. That's a crazily low number. These things are great when they're used to provide income. Only 8% of them ever actually get used that way. So that's a big problem. Problem number two: when an annuity owner passes away, the resulting transfer, compared to what happens when a life insurance policy holder passes away, is not nearly as clean or as free of tax consequences. It gets a little bit messy, it gets a little bit dirty, it gets a little bit expensive. Problem number three: even with the best annuity on the market, even if you've got that awesome income annuity, you still want a life insurance policy to provide that immediate liquidity upon your death, to provide the multiplier that you get when you put your premium in and get, premium times X for your death benefit. There's a lot of benefit to a life insurance policy that an annuity is not going to provide. So even if you've got an awesome annuity, even if you've got that income annuity and you've got your awesome upfront bonus and you've got your fast-growing income account value and it's going to annuitize, you're going to be one of the 8%, chances are you're still going to want to have a life insurance policy. It's just going to be able to do some cool stuff that your annuity can't do in terms of liquidity, in terms of providing cash up front for long-term care needs and critical illness needs, in terms of providing, a legacy upon your death. There's a lot of cool stuff that even the best annuity is not going to do nearly as well as a life insurance policy. So let's start putting it all together. Our clients have money in these types of products for a reason. We've been kind of bashing on them throughout this webinar. Bank accounts, not great. Variable products, not great. Annuities, not great. But clearly our clients think there's something worth paying for in there because that's where their money is now. So what is it that's attractive about these products? And can we take those attractive points from these individual disparate products and put them all together in something that's going to be more attractive to our clients that we can sell? Our clients want an immediate increase in the size of their estate. They want higher growth potential for their money. They want lower downside risk, and they want liquidity. Think about the most popular income annuities on the market today, the ones that provide an immediate upfront 5 or 10 or whatever percent bonus to that income account value. That's an immediate increase in the size of the estate. And annuity carriers can do that because they know they're providing a bonus to an income account value that can't be immediately accessed. But still, it looks great, and it gets our client in the mindset of, bam, immediate growth. We're getting there already. They want higher growth potential. That's why they like these variable products, because the potential is there to double your money. I mean, at any point, the market can go crazy. You could own the next Apple, the next Amazon, and be a millionaire, billionaire, whatever overnight. They want lower downside risk too. That's why we're hedging our bets over in safer products like bank accounts and CDs. And they want liquidity. They want all that money to be money they can actually touch. It doesn't do any good if it's all on paper. They want to be able to actually go out and spend it and buy themselves a Big Mac and a Ferrari at the drop of a hat. So what can we do to put all of this stuff together and make it all happen in one package? Believe it or not, we've got an answer. It's single premium life insurance. Your clients have money. They have leave-behind money in underperforming vehicles. They have leave-behind money in their bank account or their CD. They have some leave-behind money that's kicking around in variable accounts. That's just there to see what happens. And if it grows, great. And if it doesn't, whatever. They've got money kicking around in annuities that they're maybe going to annuitize, maybe not. And maybe they're just thinking, well, if nothing else, we'll leave it behind to the kids or the grandkids or to whoever. Single premium life insurance, in many cases, is a better solution to the problems that your clients are trying to solve with these other products. You can leave more to your family tax-free. You can access your death benefit early, usually in its entirety, from long-term care or chronic illness-related expenses. You can grow assets through your aggressive index strategies that still protect your principal from downside risk. There's less competition for these products. You can't swing a dead cat without hitting a stockbroker and an annuity salesman these days, but nobody's pushing single premium life insurance. Because single premium life insurance is the stuff that Frank Betcher went out and sold when he was writing that book, How I Raised Myself from Failure to Success in Selling. Single premium life insurance is looked at as an old man's game. Nobody wants to ride a mech anymore. What are you thinking? But the ship has not sailed. The ship has circumnavigated the globe and come back to port. The advances in life insurance underwriting and policy design and indexing strategies have all affected the single premium market in a big way that agents have not taken advantage of. And when I say agents haven't taken advantage of it, I mean agents have not taken advantage of this. We've been working with agents for years and years now, and I can't tell you how many people still think that a modified endowment contract has a taxable death benefit. It's not a matter of not working with single premium life insurance. It's a matter of having fundamental misunderstandings about how the products work. These things are great. Don't write them off because they were being sold by some guys back in the 1920s or whatever when the Earth's crust was still cooling. Take a look at what's on the table now. Take a look at the product design and policy design that's on the table now, available to you and your clients. If you, as an agent, don't know about single premium life insurance, then your clients certainly don't know about single premium life insurance, and you're all missing the boat in a huge way. As is the case with many financial products, getting started marketing this stuff, the best place is often with your current clients. You can talk to your current clients about single premium life during policy delivery or your normal policy review process. You can talk to them about their existing life insurance policies, especially your clients that may have bought policies, UL policies back in the late 80s, early 90s, mid 90s, when they were still being designed in a way that they're probably getting ready to implode right now. These policies that have lost money over the years can be 1035'd along with their cost basis into new single premium policies, and that's going to allow your single premium policy to enjoy some relatively tax-free growth for a while. That's pretty cool, and we're not just talking about tax deferral anymore. We're talking about taking advantage of the cost basis in an old policy and getting the tax benefit that your clients are missing out on now. If you want to market this stuff to new clients, it's all about building interest, building relationships, and then selling these policies. This stuff is not rocket surgery. People don't know these products exist. People have their money in other products because they are trying to solve the problems that single premium life insurance can solve. When I say we, Creative Insurance Partners, are actively designing and dropping postcard mail campaigns. We're always trying to find new and better ways to market this stuff. We're trying to find more effective ways to educate consumers and get them interested in talking about this stuff. And we want to share those marketing efforts with you. These aren't bespoke mailers that are going to be under lock and key and you'll never be able to see the postcard. We are always trying to make this stuff better and easier to market, and we want you to be an active beneficiary of that process. The process of marketing this stuff, whether it's to current clients or to new clients, it's going to vary a little bit depending on your level of experience, your level of comfort, and what your current book of business looks like. That's something I really want to talk to you about. I've got a lot of experience talking to agents and helping them develop their own marketing plans based on their own levels of comfort and the products they want to push. And I am genuinely excited about talking to you individually about marketing this stuff to your clients and to new clients. Listen, my name is Nick Perry. If you were a member of the Independent Life Insurance Agent Association, you may have heard some webinars I've done in the past, and I challenge you to think back or to go back and listen to some of those old things and find a webinar where I sounded this excited about anything. Single premium life insurance is worth getting excited about. I've got 2 kids, 1 wife. This is the 4th most exciting thing in my life. That's either really sad for me or really exciting for single premium life insurance, and I think it's the latter. This stuff is really cool. Here's an example of one of those mailers that we're working on right now. We've got this out actively in the mail to clients. We're working this. We're seeing what it can pull. It's a quick take our test, check all that apply. Test to see, for your clients, what their money is doing. Are you getting better than 5% returns? Or do you have money in high-risk investments? This is just an example of the types of questions that we want to ask our clients to get them interested in a conversation that leads to single premium life insurance. So once again, my name is Nick Perry. I'm with Creative Insurance Partners. You can find us at creativeinsurancepartners.com. We do what you think we do, and we want to do it with you. We've been working with agents for a long time now, and we've got some very strong opinions about what an agent relationship should look like. So if you want to find out what those opinions are and whether or not they match up with yours, contact us at creativeinsurancepartners.com. You can get us via email, that's admin@creativeinsurancepartners.com, or via phone at 404-660-1020. Thanks very much for joining us. Thanks very much for listening to me be this excited about a very exciting product. Please give us a call, shoot us an email, talk to me about this. Talk to me about why you should be this excited about single premium life insurance. Talk to me about why you're not making as much money as you could be making right now because you're not selling this product yet. Talk to me about the awesome things that this product can do for you and for your clients. Talk to me at creativeinsurancepartners.com. Thanks again for joining us.